Realtor.com just gave their 2025 housing forecast update, and I've got 6 key takeaways to share with you next. So if you get some value out of this or you like what you hear, make sure to subscribe to the channel, hit the bell for notifications, and if you want to schedule a call with our team to talk about what this means for your plans, you can do that with the link in the comments. Realtor.com just came out with their updated 2025 housing forecast, and I found 6 key takeaways in this report. So before I get into the takeaways, Realtor.com is predicting 2025 sales are going to fall below 2024 levels that were already the lowest since 1995, and affordability still remains one of the biggest roadblocks for buyers and sellers alike. No surprise here. We've been talking about it on this very show for a while that sales are kind of flat in the Northeast. We're doing better than other parts of the country, specifically in the greater Philadelphia area. We can see how the data is shaking out. And even though inventory is growing and there's signs of a more balanced market, buyer demand has not returned to that pre-pandemic level nationally. Now, we're seeing it great locally. I want to be very clear. This is not a local report. This is national. And demand here has been very strong, but we're still seeing a flat number of sales. And there's high rates. There's elevated pricing, and there's a spike in cancellation of listings. And all three of those factors, they're stalling the momentum in the market. Now, again, in the Northeast, we're not seeing that. You go to the South, the West, the Midwest, much different story. I'm much more bullish on what's happening in the Northeast than what's happening in the rest of the country. So that's good news for all my friends in the greater Philadelphia area that are watching. Takeaway number 1, inventory's up, but buyers aren't jumping. So the market's slowly shifting towards balance. That's very clear. We've seen inventory rise 16 to 18%, depending on what number you're looking at in the greater Philadelphia area. And the month supply of homes for sale is still only just above 2 months through the month of June. Now, nationally, it's at 4.6 months. So you can see the difference that I'm talking about here. And that's the highest level nationally since 2016. The good news is locally, we're not even close to that in our market. Chester, Delaware, Montgomery counties, Philadelphia, Bucks, the surrounding area, even Jersey and Delaware. The more homes on the market that we've seen, because we have seen a rise here, hasn't translated into more sales. Danielle Hale, the chief economist at Realtor.com, says even with more homes hitting the market, buyer response has remained muted compared to what we'd expect from similar supply shifts in the past. And that's really true in the South and the West. Sales got revised downward. That's takeaway number 2, and we're seeing a flat market there. No surprise there. Takeaway number 3, this is important for anyone thinking about selling. Home prices are still rising, just more slowly. They're not seeing that hockey stick-like growth that we saw in 2021, 22. And instead, what we're seeing is that nationally, predictions are maybe 2.5% year over year. And locally, we're seeing anywhere from 3 to 6%, depending on what market that you're in. So that's leading to more sellers making price cuts. So even though we're seeing more inventory, the demand's still strong. It's just not as strong as it was. Prices are still going up. It's just at a more normal pace. That's takeaway number 3. Takeaway number 4 is that mortgage rates are not going to be coming down. They're remaining elevated. As of today, when we're filming this, we're seeing just under 7% locally in our marketplace. Realtor.com revised its mortgage rates forecast slightly upward, and they are saying rates are expected to average 6.7% this year and 6.4% by year end. They were originally at 6.3% by year end. So, I mean, if that happens, that's going to bring a lot of people back to the market. We're still seeing that rates are going to be in the mid to high 6s. And one of the reasons rates are staying high is because of investor reaction to the 2024 election and the expectations of stronger economic growth and inflation. And there was some concerns about tariffs as well. Now, I don't know if that's going to be right or wrong. That's just what's happening in the market right now. Takeaway number 5, sellers are seeing some indecision in the market. They're either dropping the price or delisting. In June, we saw 1 in 5 listings had a price adjustment. It's 20%. And inventory was up nearly 30% nationally. Now, we didn't see the same growth in inventory. We did see a larger number of sellers cutting their price, making adjustments to get the home sold because of the market reaction. And that's something we're going to probably see more of. Over 40% of listings year to date in the entire country have had a price cut. And lastly, we're seeing a lot of people throw in the towel and just rent and not buy homes. So none of these takeaways to me are anything new. This is what we've been talking about here when we educate our watchers, our viewers all the time. Here's my big takeaways for people thinking about considering making a move now that we've gone through the report. One is you have to have realistic expectations of what you're going to find in the market. If you're a buyer looking for your dream home or perfect home, if you can get a 70% perfection score, so you get 70% of what you want, you should buy the property. If you plan on being there more than 5 years, the payment makes sense, and the home really works for you. You're never going to get a home that's 100% of what you want. That very rarely happens in the 25 years I've been doing this. For sellers, there's 3 pricing strategies. You've got your price below comps to get above and create a bidding war. That's kind of the idea. That strategy makes me a little nervous in light of all this data. Strategy number 2, pricing at the comparable sales. There's a lot of data that backs that up. Homes in Philadelphia suburbs are selling for 99.6% of the asking price on average. So that would be a data-driven pricing strategy. And then there's the aspirational strategy where you price high and hope something comes in. That strategy doesn't seem to be working for a lot of folks. And if you're not getting the home sold in the first 3-4 weeks, a price adjustment is something you're going to want to consider. So I'd be realistic with your pricing. And you've also got to understand what happens in the market and where your peak of the market is. Along the main line, homes around $2 million are at the top of the market. In Chester County, well, depending on where you are, because Chester County is a big county, being at 800 could be the peak of the market. Being at 900 could be the peak of the market. The same thing in Delaware County. So you've got to know where the market activity drops off a little bit and know your stats. If you don't know the data of how long it takes for homes like yours to sell and your agent's not sharing that with you, you may need to get another agent. Same thing with buyers. I'd be looking at days on market as a flag for opportunity. That's what knowing the market means, and your agent should be communicating that to you. So those are my takeaways based on all this for everyone watching, because the market is starting to change, and you can either embrace the change and get ahead of it, or you can wait to adjust, and it might hurt your real estate plans for the long term. Any questions about this stuff, you know where to get us. Just schedule a call with the link in the comments.